The US dollar has long been the world's most powerful currency, a safe haven in times of global uncertainty. But in 2025, it's facing one of its worst declines in over 50 years. What's driving this slump, and what does it mean for Pakistan and the global economy? Let's break down Nasir Jamal's Business and Finance weekly article. Between January and July this year, the US dollar index fell by over 10%, its sharpest first half decline since 1973, when the US unpacked the dollar from gold. Even though there's been slight recovery in July, confidence in the greenback has been shaken. Why? Economists are pointing fingers at President Trump's economic policies, trade wars, fiscal expansion, interference in the Federal Reserve, and attempts to make tax cuts permanent. The US recently passed legislation to make 2017 tax cuts permanent, which could add $4.5 trillion to the national debt over the next decade. But the proposed savings only cover $1.7 trillion, leaving a massive gap. Economists warn this may lead to the US to stabilize debt through inflation, undermining the independence of the central bank and the investors' trust in the dollar. Under Trump, America's economic focus has shifted inward. There's a push to reshore manufacturing even if it hurts the global trade. This shift, described by analysts as deglobalization on steroids, is rattling investors. According to a Bank of America survey, only 23% of the global fund managers now prefer US stocks. That's a steep fall for what was once a dominant investment destination. As investors lose confidence in the dollar, they are turning to other assets. Gold prices are rising sharply. Bitcoin and other cryptocurrencies are regaining traction. The euro, Chinese, and renminbi are gaining ground. Even European stocks are rallying. In fact, for the first time in 30 years, the dollar's share in global central bank reserve has dropped below 58%, according to the IMF. Experts caution that while the situation is serious, the dollar's reserve status is unlikely to vanish overnight. To dethrone the dollar, alternative currencies would need to build decades of credibility, which they currently lack. But the erosion of trust is real and growing. With the dollar under pressure, countries like Brazil, Russia, India, China, and South Africa, the BRIC blocs, are working to develop alternative payment and clearing systems. Why? To reduce dependence on dollar, avoid sanctions, and create a multipolar financial system. Many central banks are already diversifying their reserves and trading more in their local currencies. So how does a weaker dollar impact Pakistan? Economists say it could offer short-term relief, lower import costs, easier debt servicing, a more stable exchange rate. Trade economist Adil Nakhura sees a window to boost exports to Europe since the euro and pound sterling have gained value, making Pakistani goods more affordable in those markets. But not everything is rosy. The US is still Pakistan's largest export market, and any shift in global trade dynamics could disrupt established routes. Analysts like Ali Farid Khwaja warn the transition could be chaotic. Gold prices may spike further, and any attempt to move away from the dollar could provoke a strong reaction from Washington. The dollar's recent decline isn't just a temporary blip, it reflects deep concern about US economic policy, global trade, and trust in the financial system. While it's unlikely to lose its reserve currency status just yet, power is shifting, and Pakistan must prepare by diversifying trade, strengthening local industries, and navigating global markets smartly. The world is watching the greenback, and the cracks are starting to show. For more such explainers, subscribe to DawnNews English.